Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Ryan Grabinski. He is a managing director and investment strategist with the firm. We're going to talk all things markets today, but first, Ryan, how are you doing today?
I'm doing well. We're heading into summer, so it's always nice to get the warmer weather here in New York and more specifically in Connecticut, where I live. How's everything with you?
Yeah, that's right. That's right. Warmer weather, kind of a doldrums time for the market too. You get lower volume days. Typically a little bit less volatility and activity, but nevertheless, plenty to talk about. And I want to start with you with the number one question that we've been getting over the past month, or at least post debt ceiling resolution, which is the narrowness of the market and whether a rally that's so narrowly led can be sustainable. Now, we've seen a little bit of broadening out over the last few weeks, but I want to turn it over to you and get your opinion on that sort of phenomenon and what you're seeing of late.
Yeah, certainly. I would say if you're getting that question, we're constantly getting that question as well. We've certainly seen the market broaden out here. Call it the first 4.5 months of the year. It was really those largest companies, call it the 10 largest companies that drove most of the return for the S&P 500, and even more so when you look at the NASDAQ. I will say now, if you look at the equal weighted index, it has certainly started to improve, which suggests that there has been broadening out. Specifically, the industrial sector has started to turn up here as well. Even over the last couple of weeks, you've even started to see some of the consumer staples companies actually perform a little better. Obviously, the technology sector has rallied pretty significantly here, so it wouldn't really be all that surprising if those names sort of took a break. At the end of the day, if they're up 40% and they sell off, call it 5-10% from here, they're still up a pretty significant chunk for the year. But ultimately, if we do see it kind of translate into other sectors, that would be a positive for the market. At the end of the day, we do want to see participation from various sectors broadening out. Some of that is actually starting to show up in some of the fundamentals as well. We've seen this with companies sort of talking about these cost-cutting measures are actually starting to actually allow margins to hold steady where they at pre-pandemic levels, but the decline has sort of stalled out here.
Yeah, so let's talk about that a bit. So earnings expectations have come down, but flatlined a bit at a not an inspiring level. And I think the big question from there is, can companies protect profit margins? We know the story on the cost side of things, whether it's raw materials or labor has gotten more expensive. And then on the top line, you have a resilient but slowing economy. So the big question is, can those profit margins be sustained at kind of a pre-COVID level? Or is there more pain to come? And I'm curious what your all's take on that is.
Yeah, so I think one data series specifically on the economic side that we kind of watch is we watch the year-over-year change in CPI versus the year-over-year change in PPI, finished goods. And that series actually is approaching the highest levels that it has been since 1980. And so if you look at the differential there, to the extent to which consumers are still willing to pay higher prices and the PPI for finished goods is actually declining, that actually bodes well for profit margins. And we're starting to see that. As I mentioned, operating margins have stabilized at about 16.2, 16.3%, which is just off of the lows in the post-pandemic world. Obviously, this number is about 150 basis points from the highs that were seen during the pandemic. But, you have to realize that those numbers weren't necessarily sustainable, just given that companies had cut costs so significantly. Just think of, a T&E budget, for example, is the most obvious, where companies literally weren't traveling because the world was shut down and they physically weren't allowed to travel due to rules and regulations. And obviously that has come back. So the margins have normalized here. If you look at the margins on a sector level, the cyclical sectors have seen margins that have come off of their 52-week highs, and that's actually a good sign, because that actually it would mean that the fundamentals are actually improving, and that ultimately that would play into the broadening out idea. As far as the defensive sectors, they remain on their 52-week lows, and so obviously that's something we're watching here. they're obviously going to be, they tend to have more narrow margins, and to the extent to which sales, if sales aren't able to be maintained, then that ultimately would be problematic for profits. But right now, sales have actually hung in there, and if the costs are coming down, that would be supportive of profits. As you mentioned, the curl higher that we saw a couple weeks ago has been halted here. But it kind of coincides with the lull in the reporting season. I think the one sector that I'm still a little skeptical about, and this is really because when you look at the net income revisions for the year, is really the financial sector. It's one that really hasn't seen the downward revisions that we would have expected with being associated with a financial crisis or a mini banking crisis, is probably a better way to say it. And just, obviously you got to keep an eye on yields as they're starting to get back to those levels where the banking issues surfaced.
Sure, I think that makes a lot of sense. So summing it all up, we've got a bit of a broadening in the market and some resilience in profit margins and revenues at companies in both more defensive and cyclical sectors. So something to be a little bit more optimistic about. But Ryan, we appreciate the time as always, and hopefully we'll get to talk to you again soon to kind of get an update on all of that activity. So thanks again, and hope to talk soon.
Absolutely. Have a great weekend.